In this presentation, we will enter adjusting entries related to insurance for our more complex bookkeeping method. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We're going to have the same issue here, and that is that we're going to have the insurance coverage, and we're going to have to allocate the insurance coverage if we're on an accrual method. However, if the financial statements at the end of the time period need to be on a cash basis, then we need to have a different type of adjustment. So this is one of those areas where we may just want to do what we do and tell the bookkeeper or tax preparer or the accountant at the end of the time period, this is what we have done. Make any adjustments that you need at that point in time, rather than us making the adjustments and not knowing exactly what it's needed for at the end. However, the types of adjustments we could make would be that under an accrual method, we would have to allocate the insurance to when was actually used, when was the insurance actually consumed, not when it was paid. We'll take a look at how to make that adjustment this time. We're going to open up our more complex QuickBooks file here, and we're going to go to the QuickBooks data files. We're going to go to QB3, open up that QuickBooks file. We'll also open up our trial balance. So we're going to go to the documents. We're going to open up 2019, and we're going to look at the adjusting entries here for the Q3 this time. Here we are with the Home tab open, Open Windows Open, opened by going to the View dropdown and the Open Windows list. We're not going to go to the Reports dropdown. We're going to go to the Company and Financial and open up our, actually we're going to go to the Accounting and Taxes. Open up our trial balance. Change that date range from 01/01/19 to 12/31/19. Now we're going to take a look at the insurance. Now this is the more proper way that we did the insurance this time. Note that we don't have the insurance expense down here. We put it as the prepaid. And if you're working with an accountant firm or at the end of the time period or tax preparer that's more used to a traditional method where they would look through the balance sheet account and then apply out the amount that needs to be expensed, then this is the way you'd want to basically set that up. So this would be the more traditional method for a normal adjusting entry at the end, not recording the expense as an expense when you paid for it, but a prepaid expense up here as an asset, and then recording it as an expense with an adjusting entry. So in other words, if we double click on this, it's the same as the other method we had put in place. Same check, same number, but this time we allocated it to the asset rather than to the expense. And the reason for that is because when we allocate it to the expense, like it closes out to retained earnings, and that closing out could cause problems as we go from time period to time period. It would be, therefore it's easier for us when we start having the payments that are made in the middle of the year or something like that to see it as a prepaid and then the adjustments made from there, because the prepaid account's a permanent account. So if you're dealing with someone that just has that more traditional kind of thought that we want to put it on in this format and then adjust it, then this is the way we should make that adjustment. If we have that communication with our accounting firm that we're working with, how do they like to see this information? If you're just working with a tax preparer that may not understand the adjusting entries, then you may want to put it as an expense, because then they'll more likely see it on the profit and loss and then determine whether or not it's deductible or not for taxes at that point. So we're going to go ahead and make this adjustment. So we'll open up our worksheet for Excel. It's going to be the same adjustment we had before, but the reverse. Now we're once again going to say that we had 12-month policy that started in November here. So the 2 months had passed then. So we paid whatever we paid, 2 months had yet passed. We paid $12,000. So that divided by 12 months would be $1,000 a month times 2 months. So there we have it, $2,000. So we need to expense $2,000 then. We haven't expensed anything. It's all in the asset up here. So we're going to go to insurance expense this time. Copy this and right click and paste 1, 2, 3. This time we're going to expense $2,000. Last time we had to take away $10,000 of over expenses. Now we're going to add $2,000 of expenses which haven't been included yet. And we're going to take it out of the prepaid insurance. We're going to right click and copy, put that underneath, right click and paste 1, 2, 3. I'm going to say negative of that number, and there's our adjustment. If we record this, then I'm going to record this here. Let's do the expense first because it's the debit. We're going to say insurance expense is here, and that equals, pointing to the insurance expense, and enter, bringing the balance up. So that's going to increase the expenses, decreasing net income. If we then go to the other side of things, prepaid insurance equals the prepaid insurance, and that brings us back to that $10,000 now that is still outstanding because there's 10 months of $1,000 insurance as of the cutoff, as of the end of the year. We could do that same adjusting entry in QuickBooks by going to QuickBooks here, and I'm going to close this out. We're going to go to Company. We're going to go to Make Journal Entries. Change the date to 12/31/19, and we can say this is going to go into insurance expense, and they should have that. We haven't used it yet, but it has been given because that's going to be a standard account for most industry, pretty much all industries. And then we're going to say this is ADJ for insurance. So ADJ for insurance. And then the other side is going to go to prepaid, which we have set up because this time we put it all to prepaid. We set up this account when we did the transaction, with the original payment for the insurance. And this is ADJ insurance. So same thing, save and close. And there we have it. Now this is down to the 10,000, and we've got the insurance down here, which should be insurance expense of 2,000. For more accounting information and accounting courses, visit our website at accountinginstruction.info.